Let's go check out that new Rivian.
That more range of now price points from Rivian, showing signs of just a more mature company.
We haven't said exactly when in early 2026, but it's important that we get it into market. One, because as you see from this room, there's a lot of excitement around the product.
With Tesla, it's getting looked at more like a car company. And when you think car companies, you think Ford, GM. These have been boring stocks that have kind of been stagnant.
All that and more. So let's get to it. Tesla stock is up in the pre-market a little over 0.25%, sitting at 179.23. It's Friday. I don't know if I'll be placing any zero-day options. If it is, I might be placing them to the downside, but we'll see. As you may or may not know, Rivian kind of stole the show yesterday.
Let's go check out that new Rivian. The developing story with Jenny Horn, our markets correspondent, hosts the Next Gen in the newsroom. Car looks pretty snazzy, Jenny.
It does look pretty snazzy, and I will say this was a pretty big announcement, Oliver, because not only did they unveil this cheaper R2, they also unveiled the R3 and the R3X, which are their versions of the crossover. So all three of these models, they did say, will be expected to be cheaper than their previous R1. But R2 is the one we have a little bit more specs on as of today, expecting to cost around $45,000, and they also did announce the fact that this will be continuing to really expand on what the technology they built on the R1, but more specifically, this will also run on Tesla's North American charging standard and will have setups available for that. So when it comes to charging concern, which is, I think, top of mind for many potential EV buyers, that's something that they've already figured out. But overall, the R2 expected, like I said, $45,000. It does not go on sale, though, until the first half of 2026. But starting today, you could actually, for $100 just down today, you could put your name on a waiting list for 2026.
The R2 and the R3 are here, or more than likely in 2026, pending any potential delays. But I'm rooting for Rivian. This is going to be huge. I don't know how easy it'll be for them to produce this car at cost. That $45,000 price point they have for this vehicle, yeah, I'm inclined to say that it's going to be around $55,000 initially. I mean, from now until 2026, that's a long time. And just like Tesla with the Model 3, there is going to be some growing pains involved. Whether or not Rivian can endure them, that's what we'll be looking for over the next couple of years.
This is, of course, the fourth product from Rivian, following their commercial van and larger, more expensive R1S SUV and the R1T pickups. But those, I mean, can be very pricey. I mean, the R1 vehicles, for example, can start at roughly $70K, go all the way to $100,000. So what this has been seen as so important is that it offers now finally like basically a more affordable vehicle, but also what we've seen with like the Model 3 from Tesla, that more range of now price points from Rivian, showing signs of just a more mature company for that reason. And we needed this win, Oliver, because as we know, as of their last fourth quarter, they were still losing about $45,000 per vehicle.
Right.
So, I mean, like, that's crazy in itself. They have to figure that out.
That's the trillion-dollar question. Will they be able to get that number down from 45,000 to profitability? It's easier said than done.
Let's talk about shares of Rivian, losing 50% of their value so far this year, but up 10% today as the company unveils a new lower-cost electric SUV at a very important time for the company. Our Phil LeBeau is in California with Rivian's CEO for a first on CNBC interview. Phil, take it away.
RJ Scaringe, founder and CEO of Rivian. This is the R2. We're going to talk about that in just a bit, but I think one of the pieces of news that has come out is this was going to be built at your new plant in Georgia.
Yep.
But you're pausing that, correct, that plant? Explain what you're doing here.
Well, we're so excited about this vehicle. We wanted to get it into market as fast as possible. And we'll still be building these in our plant in Georgia, but we're going to first launch them out of our facility in Illinois.
Sounds eerily familiar to what Tesla's going to be doing with their next generation platform. Not going gangbusters down there at Giga Mexico, instead going to start production of that vehicle at Giga Austin initially. And once they've worked out the kinks, make sure Giga Mexico is as efficient as possible. There's nothing wrong with taking pages out of the Tesla playbook.
And what that gets us is an ability to get it to market quicker, and it saves us well over $2 billion in capital in the process of launching it.
So you are pausing the plant. You're not getting rid of the plant, but you're pausing the development.
Georgia is incredibly important to us. The partnership we have with the state is outstanding. And for us, the most important thing is getting this vehicle into the market as fast as we can, and leveraging what we have in Illinois was really enabling that.
And in the process, conserving some liquidity.
Yeah. I mean, what we've said is it saves us over $2.25 billion.
When you look at building this in Illinois, first half of 26 is when you expect it to come out. You said you were bringing it forward as much as possible. How much time will you save by building it at your existing facility in Illinois?
We haven't said exactly when in early 2026, but it's important that we get it into market. One, because as you see from this room, there's a lot of excitement around the product, but it's also important for us from a business point of view as we scale what this represents for us and really growing the number of addressable customers we have.
Opening up that total addressable market, it is key to profitability as long as it doesn't cost you an arm and a leg to produce these things.
You're expecting to start at about $45,000 base price. Things can change as you get a little bit closer as you go through development. Is that low enough for what the market is looking for right now? Because you know that everybody wants an EV even lower. They want it under $40,000.
Yeah, well, there's a few things to note here. This vehicle, in terms of its size, its package, it we think fits the market where you see the most popular segments, the most popular size, midsize SUV, beautiful, comfortable package on the inside, but it also qualifies for the federal tax credit. So there's a $7,500 tax credit, which means the end price to a consumer, the starting price would be $37,500. So we think that's a really nice package.
Sounds like the Model Y to me. Except that was released back in 2020 and this thing is being released in 2026. I can't help but notice the significant gap between these two products. In 2026, I wonder if there will be a significant gap when you're talking about performance, functionality, and price. R2 versus Model Y.
You had a bit of a surprise up your sleeve here with the R3 and the R3X.
It's so cool.
Explain this. Now, you don't have a date for when these will be manufactured, but we're talking about a crossover utility vehicle at a lower price point than the $45,000 expected for the R2, right?
Yeah, so R2 represents not just a vehicle, but a platform. And on that platform, we have its sibling product, R3. And R3 is, as you said, it's a crossover. It's a really unique form factor. But the price point on that will be lower, and it'll come out in sequenced after R2.
And when you say that lower price point, what have you heard back from your customers in terms of you've got to come in lower?
Well, I think, leveraging what we do on R2, that platform, but then really taking the vehicle, making it a little smaller, allowing us to take costs out of the battery pack, and then meaningfully take price down below that 45 that we're starting with on R2. That, we think, really opens up a large cross-section of customers that are looking at everything from cars to crossovers to SUVs to hatchbacks. So the R3 really fits such a broad spectrum of buyers.
Something tells me that it's supposed to rival Tesla's next generation vehicle. Is it possible that it could be priced somewhere under $30,000? Yeah, hold your horses, hold your horses. Unveiling this R3 product so soon? That was one hell of a gambit. And should be widely popular, but when in the hell would you possibly get this vehicle? It's going to be after the R2, and that's if the R2 is on time. So what are we talking, 2027, 2028 when we get this R3? Meanwhile, Tesla's next generation vehicle should come out sometime in 2026, maybe 2027, if you're skeptical on timelines. But I don't expect Tesla to unveil the next generation vehicle no more than 6 months before deliveries. Pre-orders for Tesla's next generation vehicle is going to break the internet.
You cite the range on this R2 as 300 miles. I'm curious as to how you calculate that range, and will the driver in the real world really get anything close to 300 miles of range? My skepticism comes as an owner of an RV, not one of you, of an EV, not one of yours. And I just don't believe that the cited mileage is what I experience.
People, let me tell you, depending on how you drive the vehicle is going to determine what your real world mileage is. If you're a beast on the pedal, testing out the acceleration at every stoplight, you're not going to get the EPA standard range. If you have the AC cranked up to 10, or engaging in all of the special features that comes with, say, like a Tesla, Sentry Mode, cabin overheat protection, and to some degree, FSD, you're not going to get exactly the range that you would get if you didn't have these features activated. Everything you do in the car, in addition to driving it, is going to put a drain on the battery. Each person is going to have a little bit of a different range. This is an average. If you're not meeting the EPA standard range, maybe it's something you're doing.
Yeah, it's a great question. When we cite the 300 miles, we think of that as real-world range. There's the EPA standard, which drives what's tested, but it's really important from a customer expectation point of view for us, for the vehicle to achieve that EPA-rated range. And so we spent a lot of time on that. We've seen that with our R1 products, that the stated range actually matches what you see in the real world. But I think this is a big part of how, when we talk about being authentic with our customers, being authentic with our owners, a big part of what we focus on.
So what's happening in the EV market, your shares are getting crushed. Almost all EV shares and EV company shares are getting crushed. What's your thought?
I think ultimately, what we can say here is the world will electrify. Every car sold in the United States, and for that matter, all markets, will eventually be electric. Now, the question we can debate is when that happens. But key to that is getting great choices. Customers need choices that are deeply compelling. And that's how we see R2. We see it as something that's going to take the success we've had with R1, translate that into a lower price point, smaller form factor. So I've never been this excited about a product as I am about R2.
Big day for Rivian. Now can they execute on these plans? I've got faith that this startup will survive. What's happening in the stock market? EVs are being crushed. The world will electrify. It's inevitable. We're on a path to sustainability. Best of luck to RJ and the crew over there at Rivian. Show these legacy automotive manufacturers over here in the United States just how to do this, son.
EVs hot anymore? The trend of EVs coupled with intense competition for Tesla. What do you think here? Because this name, let me see, year to date, down 28%.
Down 28% after being up 100% last year, but still lagging because it never really made those all-time highs, making back those losses from 2022. So with Tesla, it's getting looked at more like a car company. And when you think car companies, you think Ford, GM, these have been boring stocks that have kind of been stagnant. The real investor, the people that follow Elon Musk, they know him as a visionary and look at the technology behind it and traded it like an AI play. That story has changed because they haven't been delivering. They haven't had the next big thing for Tesla. And then people are concerned. Is Elon Musk worried about too many other things? Is he worried about X? Is he worried about the boring company? Is he worried about space? I would never bet against Elon Musk.
That is, unless you're a masochist and just enjoy the pain.
But right now, Tesla has been, it's been missing the ball. It's been dropping the ball, and shareholders are just, they're getting out and they're waiting to see when the next opportunity would be to buy, and it just hasn't arisen in the last few months.
I suppose Cybertruck deliveries just aren't enough to keep the stock elevated. It's just the baddest thing on four wheels on the road right now. It's okay, it's okay. What I'm hearing is, technically, Tesla trades like a technology company, an AI play, right? So we need something that justifies that trading. Elon has been saying FSD is supposed to be here this year. You know the story. And in its absence, Tesla seems to have disappointed on something that's never been done before. FSD may be one of the most transformative ways to use artificial general intelligence, but that's not gonna just happen overnight. The maturation of the technology is growing exponentially. I've only had access to the program for less than a year, and the growth is baffling to me in that short time. I remain confident that the team will figure out how to monetize this, maybe shed that beta tag, and get this fully functional in the real world. As it stands right now, it does most of my driving for me. And although it's not perfect, I don't think I want to be in a car that doesn't have this software in it.
That being said, Apple and Tesla, buy, sell, hold. What do you think about these kinds of names? What do you tell investors?
I believe in Apple for the long term. I don't think this is something investors that have been involved in the stock should worry about. Tesla, that has been a stock that has continued to struggle. That is something I would avoid. I wouldn't put new money to work in Tesla at these levels. But I do believe in Apple versus Tesla. If I was to pick one or the two, I think Apple's where you want to be.
Yeah.
It's a free country. You can do what you want. Me? I'm buying Tesla at every given opportunity at these levels. Why? Because knowing that in 10 years' time, this will look like bargain bin prices. My confidence stems from using the various products that Tesla has out. This is not just a car company, people. In addition to the vehicle, I have Tesla Insurance. I have Tesla Electric. They are my energy provider. I manage all of these functions through the app on my phone. If that's not technology, I don't know what the is. I have Tesla solar panels on the roof. I have Tesla power walls in the garage. Level 2 charging in the garage. And anxiously awaiting a potential HVAC system from Tesla. I know they've got a lot on their plate, but damn, let me have that, My enthusiasm for TSLA stems from the products that I use from Tesla. Everything they touch seems to turn to gold. In conclusion, Rivian unveils the R2 and R3. It's going to be a rough road ahead getting the R2 platform up and in production, but I am genuinely hoping for Rivian's success. At the same time, Tesla seems to be disappointing many in the stock market. They're behaving much like an automotive company, not the transformative technological company that they tout themselves to be. While the stock market is wavering on Tesla's value, I for one will be buying Tesla stock hand over fist, placing protective puts until the stock market finally realizes that Tesla's valuation has been misunderstood. That's all I got for you today. Be easy. Purr.